Bring in Ben Emons, founder and chief investment officer at FedWatch Advisors. Ben, great to have you with us. I know you've been listening in on this conversation the whole time. Where do you stand? Are you in the Dan camp or are you somewhere happier?
I'm in Los Angeles. I feel pretty good there actually, but with a little bit with Dan because this is a market that really is paying attention to the price of the stocks, and for people who don't track this maybe closely, but this PE multiple we often talk about, setting on a ratio, looks indeed on these stocks that we really got very high on the price relative to earnings, even though that the outlook for these earnings remains strong. I think that's the realization today in the marketplace that maybe this got way too overextended and you see profit taking and then people react to that profit taking in addition to the sentiment factor we talked about, like people calling for shorts. I would say though to people watching this, like you don't want to sell here or go short. That's a pretty specific type of trading strategy. But it is an opportunity to ultimately grab some value here once this sort of flushes out. So to me, this is like a profit-taking sort of movement, Mel. It's more like a kind of like a frost taking out of the market, like heat taking out of the market, than maybe saying that the market is completely so overvalued that we're having a bubble formation that's bursting.
Ben, you say we're in nosebleed territory in terms of valuations, which we've been at for a while, as you know. What would be the thing that you're watching, the main thing that suggests people will start to focus on valuation? Today wasn't necessarily the day, but what would it look like in your opinion?
I think, Guy, that you do get at some point the markets start to pay attention to the economy really getting more visibility. I think that I think plays a role here too, because we have no data and we don't know when this government's going to reopen. So to get better sense of what really is going on in the economy, I think that is the other part of the story. In addition to that, there's a lot of positioning, as Dan says, it's super concentrated. So as that sort of gets worked out a bit, I think that's the other sort of moment, technical moment that you could pay attention, have these stocks sort of worked off this excess value against an economy that likely still looks really good, but we don't know really for sure. So I think that's the way to look at it.
It's almost like we are in a blissful period of no information, Ben, in terms of the economy. And so we were able to sort of float along. But in your forecast, where will the Fed go in December? Hold?
So we're getting good signals here, Mel, that the Fed wants to potentially go on hold because there's this worry about inflation that's lingering in a lot of these Fed members' minds. I was kind of like surprised to see Lisa Cook yesterday put in her speech a pretty strong language, like, if this tariff continues to go on and starts affecting inflation, we have to act forcefully. From one of the first ones to make that sort of statement that we heard, in 2022 when they had to catch up with inflation that really brought the market into a bear market. Don't think that we're going to see rate hikes being considered, but a hold is probably appropriate for many of these Fed members. So I think it's a hold, Ken.